Hello everyone, happy Sunday. This is Simon with AvaTrade. I want to welcome all of you to our weekly webinar and a special warm welcome to the new people. And for you, pretty much the title says it all, your weekly trading plan. And our regular attendees probably tired of me saying that, but I'm just quoting that what the traders are saying. You plan your trade and then you trade your plan, and that's what we're trying to do, not more than less. It's really to see what's happening globally, what's happening individually in specific instruments. We'll take a look at economic calendar and try to create the structure so it just kind of removes the spontaneous and reactive trading if we do have a plan. And in general, as I like to say, that not just in trading, but in any activities that we have in life, it's important to plan. It just creates more structure and removes unnecessary chaos. So that's what we're trying to do here. A few things about myself. Simon Friedman, that's me. I'm a senior account manager with AvaTrade, and in about 10 days, it will be 23 years since I started my trading career back in New York. I was a professional proprietary trader for about 11 years. And I don't know if any of you know what proprietary day trading is. It's super stressful. After 11 years, I kind of left that field and definitely never stopped trading. And I went to mentor, educate other traders. And of course, I continue trading until today. And I'm very happy that I have an opportunity to work with the customers of AvaTrade. The agenda of the webinar, usually the same thing we do every week. We speak about indices, stocks, commodities, Forex. We'll be discussing the same today, some Asian indices, US indices, some Europeans. We'll take a look at few stocks that includes Netflix, Cisco, Pfizer, and others. We'll take a look at commodities today. It's going to be regular suspects, oil, natural gas, gold, soft commodities. And Forex, of course, we start with dollar index and then we analyze a few pairs. And at the end, we'll just say a few words about the cryptos. Okay, before we go any further, this is the risk warning statement. You can find the full statement at avatrade.com. What we do here, it's purely educational. Of course, we do not suggest any trades. These are our channels. Highly recommend for you to subscribe. You have Telegram, you have Twitter, you have YouTube, my favorite, as I always say. Why is it favorite? Has a lot of things, of course, videos, you have tutorials, you have tons of educational material, and of course you have all the webinars recorded and posted there, so in case you missed any of the webinars, you can just go back to history and watch it at your own convenient time. And all you have to do, just of course, just subscribe and then click on that small bell that will notify you every time something new is being posted to our channel. Okay, so a few things. As you know, I like to prepare the screenshots, just a little bit of illustration of what's happening. So the main thing that the world is, or financial world at least, is focusing on, of course, is the debt ceiling. And this is a nice article. Again, the screenshots are from marketwatch.com. You can go and research it and take a look and read it. It's really in focus, and I just made a little bit of research. It says right here in the article, I'm going to just quote one of the paragraphs, and I never knew these things. It's very interesting to understand what debt ceiling is. Some of my friends were asking what really debt ceiling is. So now I know, and if you read the article, you'll know more about it. I'm just going to read a quote one paragraph, and it goes like this. The contraption itself was built by federal lawmakers during the World War I, granting the U.S. Treasury the ability to issue bonds without congressional approval, but only if the total debt of the federal government stayed under the specific ceiling. Congress has raised the debt limit dozens of times since then, but in recent years, the maneuver was has become fraught due to the deep political divide in Washington and across the country. So basically what it says here, it's very interesting. They created, it was a good tool, as during the war, of course, the government needed money, so they were able to issue the treasury, and that was good because then whoever buys the treasury would make some money. And it was no issue raising it for years. But as the tension between the parties, I guess, grew, I'm not big in politics, so it looks like politicians are using this to kind of push their own agendas and so on. So that's the situation now. And of course, as I mentioned to you last week, Janet Yellen said that they actually might run out of money by June 1st. And current debt ceiling is 31.4 trillion. It's being set. So what happened? We're going to take a look at the market later. But what happened on Friday? Before Friday, it looked like they really progressing in negotiation. And then Friday, I guess there was the negotiation was put on hold, and market reacted in a negative way right away. So you could see how sensitive that issue is. So this is as far as that ceiling still remains the issue. We are on 21st of May, so we still have 10 days till that thing either being solved or it explodes. Okay, and a favorite saying, or not the favorite, but common saying among the traders: sell in May and go away. It says right here in this article, there is still time to sell in May and go away if high inflation sticks around. Okay, and that also interesting article. You can take a look at it just to learn a little bit about fundamentals. And another one that I took a screenshot of: Japan stock market smoking the S&P 500. What does it mean? It's really hot. And I mentioned to you, I believe last week, I might be mistaken, but I think I did, that Warren Buffett is really heavily invested in Japanese market as he sees a great opportunity there. So we'll take a look at Japanese index and see how it looks. Okay, so those are the highlights pretty much that kind of the financial world is focusing on. And this is the economic calendar. And just for new people and for all of us to remind ourselves that knowing about the event from that economic calendar is showing, it's important. This way you'll be prepared. You won't be caught off guard. You won't be caught in the surprise move when you're in a sensitive position and so on. So here, I take out only high impact events, as you could see here in red. You can filter it. You can find economic calendar on our web trader. You can find it on the app. You can find it any third party. It's all public information. Every source is reporting the same numbers, the same dates, same hour. Here I have times in GMT. I really highly recommend that you use the economic calendar. It's really, I would say, impossible to really predict anything specifically, but knowing these things are very, very important. So Monday we have interest rate decision from China. Tuesday, manufacturing PMI from Germany and from European Union as a whole. PMI numbers from UK, retail sales from New Zealand. Wednesday, we have more things from New Zealand monetary policy statement. We have interest rate decision. It looks like they might be catching up with the rest of the banks by increasing by 25 basis points. Rate statement and press conference, they have pretty much the same format like US and Europe. CPI numbers from UK, very important. They really expect, it looks like they expect a lower inflation. That's going to be interesting to watch. Definitely pound will be affected, and US FTSE index will be affected as well. We have FOMC minutes for the last meeting for the Fed. Very important. They'll be kind of revealing the discussions and their thoughts going forward. Thursday, GDP numbers from US. Friday, retail numbers from Australia, durable goods from US, and that's it pretty much. So again, there are much more events here. If you just look at other level of impact. I just choose the high impact ones, the most important ones. The others are very important as well. So if you are trading markets that are sensitive to these announcements, try to really be on top of it. Okay, so now we can move to the MT4 and start discussing the markets. And we'll start with Japan. As I mentioned, that Japan market is super hot. Buffett is investing heavily in the local companies. Other investors, of course, looking to make money. As everything, they love investment. You look for opportunities that will give you a highest return, and it looks like Buffett found potential good rewards there as far as financial gain. And usually he's right as the public is looking at it. So this is Nikkei, as you could see, monthly chart which just broke through the previous resistance, and the high here was in 2020 December. We could be on the way reaching that level. Now China, as you know, I mentioned China a lot. We are trading in this range between 13,300 being the resistance in a way to the support. The recent support was just established at around 12,850. And as you know, fundamentally, China was suffering a lot with the COVID-0 policy. Then they started removing those restrictions, and there was a move to the upside. But we've been zigzagging for a while. It's a sensitive issue. And as of now, as you could see, on Friday, it looks like we retested the support, and we held that support around 12,850. We are below all moving averages. And of course, we'll see the upcoming week. Definitely, Chinese index is sensitive to everything else that's happening globally, especially the US market. But of course, it has the life of its own. So as of now, not to try to predict anything, we are holding this support. And if we choose to move higher, we might go and retest the resistance here. First, we'll need to struggle with the all moving averages. As you could see here on Thursday, we hit the 200 moving average and we failed and moved back down. So this is China. Now with China, we're going to go deeper into it. I just want to mention two things. Copper is staying weak, and oil is kind of a channeling here between 70 and 73. And the reason I'm mentioning those instruments, as you know, I always do, and that's a common thing that China, as I believe second economy, it's using a lot of those commodities, oil and copper, and every time the Chinese market moves, oil and copper usually reacts to it. Okay, so that's as far as China. Let's go to US indices, and we start with NASDAQ lately being the strongest one. As you could see, we just, I get to the weekly chart. Last week or the previous week, we did finally close about the 13,310, and then this past week we really had a nice move to the upside, and we broke the previous resistance that we had back in August of last year, and the high here was 13,739, and we did close about that. So NASDAQ again being the strongest. Friday, as I mentioned to you, the moment the negotiation went on hold, NASDAQ reacted to it. Of course, all the US indices reacted to it. So what we have now, we have the Thursday's high of 13,939.75. This is approximate level. So that level, I'm just going to remove it not to confuse you. So Thursday level or Thursday's high should be our indication of a possible resistance. And if we have more panic or more negative mood coming in the upcoming week or this week, we might see continuation to the downside and retesting the levels. We might even come to the serious level of resistance that we had it just became support again, but didn't confirm it yet. So we might come and retest this 13,300 area on NASDAQ. If you take a look at S&P 500, it just tried. Only this week we closed about that 4173 level. Why that level? We stopped the initial move over here. A lot of actions around that level, actions around this level, and we had few attempts to break it. 1, 2, 3, and for few weeks, 1, 2, 3, for 4 weeks, we tried to break higher. We couldn't. This is the first time we actually closed about that level. So again, two scenarios. If everything lines up positively for the equities, we might see continuation like NASDAQ did, and a possible retest of this recent high here that we had in August, as we said on NASDAQ. So here in S&P's, that level, it's 43.27 and a quarter. It's about around $50 from here, 50 points from here. So if we do establish support, we might go again if fundamentals are playing for the indices. And if not, we might dive below this level again and start building another resistance and continue lower from there. Dow Jones is the weakest out of three. As you could see, we did try to break that level around 34,200 and we failed. And this is a similar idea. Support, support, resistance, resistance, resistance. So that level has been super strong resistance right here. Also, we are below the 100 moving average, between 100 and 50. So if things are positive coming this week, we might hit and retest that resistance again. And as you could see, out of three is the weakest. So NASDAQ is the strongest out of US indices. S&P is next, and the weakest one is Dow Jones. Okay, let's take a look at European indices. As you could see, the UK FTSE, it's kind of having a hard time breaking this 7,800 level. We try, and we fail. And we have inflation data, as we mentioned this week. We might see some moves either breaking to the upside or finally giving up and moving lower. DAX has been super strong. It looks like we made all-time high. Yes, we did. We just broke through the all-time high that we established back in 2021 November, and we closed on the high of the day pretty much. The high of the day was 16,374, and we closed 343, about $30 lower, or 30 points. That's quoted in euros. So we'll be watching it. As you could see, towards the end of the day, it was a little bit of a profit taking, but we did establish to close at all-time highs on DAX. Let's see if that continues, or we might see some profit taking and sliding lower. French index has been really holding this support around 73, 76. That was the level of the highs back in January of last year. The high was here, 73.80, 73.82. So I'm just gonna correct this, 73.82. Okay. All right. So after a few attempts to break higher, we failed, but then in a straight line, in the 4 straight weeks, we broke to the upside, and since then we've been closing above that level. That's bullish, and maybe the index is waiting for some good fundamental reason to continue higher, or maybe it's a consolidation, and maybe they're acquiring short positions and they're going to take it lower. It depends, of course, on the big fundamental picture, what's happening in pretty much everywhere: Europe, US, Asia, debt ceiling in US, inflation situation globally, and other things. Let's take a look at the Indian index. Had a nice recovery, as you could see here in the weekly chart as well. We had the support, double support here, and then we are facing the resistance that we did have prior to making a lower low here. That's around 18,300, and it looks like resistance is really holding here. Okay, that's as far as indices. So we established that China is zigzagging. It looks a little bit weak. Japan, on the other hand, is super strong on a lot of investments coming in, including the Buffett and his fund. And US indices were strong before Friday, a little bit of the correction, and the whole focus is on that ceiling. Let's see how this week starts and how US market will be moving, and of course leading the rest of the world as far as the equity markets. Okay, so let's move to stocks, and we'll start with Netflix. It looks like Netflix is reporting pretty good things with the changes, with the new way of memberships, with the advertisement and so on. As you could see, it's reflecting on the chart as investors got excited. Thursday was a big move to the upside. Just to give you a range, we went from 346 to 375, big move, and it looks like we retested the previous high, and that was a while ago. That was in February. The high here was 373.25, 373.26. As you could see, we touched it on Thursday. Let's take a look. It was a fight there, actually. This is a 30-minute chart. So you can see the stock gapped. It moved higher. It was trying to hold to that level, and then it sold. It came down, and on Friday continued selling. We did close at 365. So also a good kind of measures here. You know that at this level, it's currently a resistance around 373, and the support is around 348. This is the level that we reached in the last move to the upside before we went to correction. So it's a nice range. We'll be watching what's next. Cisco, very interesting. Cisco reported, and after the market stock went down, it was actually the first I was watching. The stock went up first, then went down. As they said, they actually reported great news, great numbers, but they said that the purchases went down comparing with last year, and they predicted they're gonna slow down as well. So the stock actually closed the extended hours on the lows, and then of course it gapped down when the market opened on Thursday. But on this general excitement of the progress of that ceiling, and I guess they read into real numbers, the stock covered the gap and closed at the highs, and Friday continued higher. So and we stopped, as you could see, we stopped at this level here of the previous gap. The high here was 49.21, and we actually hit that level on Friday. So again, it depends what the general market will be doing. If the market is weak, we might see a correction in Cisco. It looks like this move was strong. It's a strong move. It's about 9-10% move to the upside, and we stopped right here at the level around 49.25. So we'll be watching that. Now, Walmart reported pretty good numbers, but the stock, as you could see here on Thursday, the stock went higher, retested the resistance, and came right back. And we closed almost flat from the opening price. The opening was 151.50, and the close was 151.38, only 18 cents lower. But then on Friday, the sellers came in again. So we are clearly in this range between 148 and 153. It's about $5 range, and we are closer to the bottom of it. So let's see if we do come to 148 and a few cents, see if the buyers are stepping in. And if we move higher to around 153, we might see sellers coming in again. So that's on Walmart. But as you know, just to remind you, last week we discussed the retailers are really suffering. And the biggest suffering is in appliances, furniture, and that area. Now Pfizer, going to pharmaceuticals. It looked like on Friday, even though market sold, it shows a little bit of a sign of life. Sorry for my sarcasm here. The stock has been really selling, as you could see. Logical thing comes in. I think a lot of investors were betting that this COVID thing will be adding a lot of value, and it did in the beginning, as you could see all this move with the vaccine and everything else. And then since then, things are not looking so great for Pfizer. Even though a few weeks back or a few months back, we spoke that some investors were looking for a good value for return around $40, if I remember that correctly. And it was a nice try, but then we were sliding. So Friday, it's the first kind of green day in a while. Let's see if that's sustainable, if we might see some move to the upside. Google is strong since the idea of AI is being progressing with Google. As I mentioned to you last week, Oppenheimer, they increased the target price to around 145. The stock's been super strong this past few weeks. As you could see here, since we held this 105, we moved 2 consecutive weeks nicely to the upside. So we'll be watching that for continuation. Now, one stock that didn't retrace so far, it's Microsoft. I'm really watching that stock. It's been going straight for a few months, 1, 2, 3, 4, 5 months straight. And let's see what's next. Maybe we are trying to reach the all-time highs. Let's see if that works. So we'll be watching Microsoft. Facebook also has been strong. As you could see, we held this 131 support. There was a resistance back in March, and we are holding strongly here. So as you could see on the daily chart, 131 is a nice support. We just break through the recent high here, and we closed at 245.42. Let's see if that works. Intel has been super weak in the past 2 days. It's kind of recovering a little bit. We are about 200 moving average again. And Tesla, we end up with this. Tesla has been strong for the past few days. Even on Friday, on the weekday for the market, the stock was up. We are playing with 180 mark. It looks like we're closing this one gap over here. And the key level is 200. If we are continuing higher, we might see around 200 the resistance. And that's as far as Tesla. Okay. Let's move to commodities. But before that, I want to bring up a few banks. As you could see, banks are very sensitive to what's happening. That ceiling, as I mentioned last week, that banks are the biggest holders of those treasuries, and should there be issue with government being able to pay, the banks will be really suffering with those holdings. So as you could see, JP Morgan being the strongest one with the latest buyouts and deals that they closed, but still Friday it was in red a little bit, but the other banks had significant sell-off on Friday. That's the Citigroup, Bank of America is holding at the lows. Goldman also was selling. So banks will continue watching banks being sensitive to what's happening in this government negotiation around the debt ceiling. So that wraps up the stocks. Let's go to commodities. As I mentioned to you, oil. We are rejecting the 73 resistance here. We're right in between this $3 channel, between 70 and 73. We'll see what China is saying. Let's see what globally the market is doing. As of now, it's a clear channel, as you can see, very obvious between 70 and $73 since this latest recovery. And just to remind you that beginning of May, beginning of this month, we were as low as 63.68. And we are currently right in between those support and resistance here around 71.5. Copper. After sell-off, it's really holding to the lower range of this move. That's not so strong. There is a potential move continuing and retesting the 200 moving average on the weekly chart as well. We're up below 100 and we closed the week flat. Our favorite natural gas, we finally did something to show some strength, and we mentioned it yesterday, not yesterday, last week. We said that we are in the channel between 214 to 233. We need to close above 233, and the next checkpoint will be around 260. That's exactly what happened. We hit 263 on Thursday, and Friday we actually tried to break out of the channel, and we did close within the channel at 259. So now natural gas will be trying probably to break out and start establishing support similar to what it did over here. And if that happens, it opens the space for a next level of reference. That's around 3 that we hit back in March. And if we continue experiencing a hard time breaking through it, we probably just channel within this tight channel again between 233 and 260. So natural gas, at least a nice move on Thursday, close at the highs. So that give some investors hope that it might continue to the upside. And Friday, as we said, it tried, but it did fail to go higher. So we'll be watching that. Gold has been this past week has been weak, as you could see. Most of the week is sold, and we mentioned this level around 1955. We hit that level. It looks like it's support. Friday it bounced from that level nicely. So again, it's sensitive to inflation. It's sensitive to dollar, US dollar, and it's sensitive to what equities are doing. So as over here you can see, it was super connected to the market running to the upside, and as you could see, the market or the equities corrected on Friday, and gold did as well move to the upside. So it looks like for now the 1955 level is holding. Let's see if that continues into this week. Now soft commodities had a huge sell-off this week. Start with wheat. The whole week is actually sold, and we are testing this support here around 603.5. We did touch it by hitting 601.75, but closing higher. So it looks like this support might be holding, and we might be bouncing back, or if we do break that level, if you could see on the weekly chart, it's a strong level. It was a big fight over this level. We moved higher, made a higher high, then confirmed this support, made another higher high, and then we didn't touch this level, and we continue all this move to the upside. So this level around 603 could be holding. Again, we're not going to be making any solid plans. You cannot in the market. And we'll be watching what's happening in this week in wheat. Corn as well is sold out. And it did try to run on Friday, but it didn't. So we'll be watching for continuation. Soybeans, wow. Soybeans, it looks like they broke through this previous support here. 1313. So we are, in a way, it looks like we're in a free fall. Of course, they could bounce, but they might as well move and retest the 200 moving average on the weekly chart. Because on the daily, another reason, wow, take a look here. The 50 moving average is crossing down below 200 moving average, and some traders like to use this, and they call it a dead cross, something that triggers some technical selling in the instrument. So we might see actually continuation to the downside or not. If we climb above the 1312 level again and start establishing support, we might see the reversal. As you know, markets go in cycle, but this is a strong sell-off. As you could see, it was previous week was a sell-off. We closed at the lows, and this week it was intense sell-off, and we broke to the previous level of resistance. Okay, so that's as far as softies. And let's take a look at two more things. Sugar after this robust move to the upside, it looks like it's holding it. It's not moving any lower, so it looks like it's sitting between 25 and 27. Let's see if that breaks one way or another. And cocoa is at historical levels, as you could see. In the month of May, we continued higher, and this was 1, 2, 3, 4, 5, 6, 7th consecutive week to the upside, and we just broke easily through this previous resistance that we had 2018, 2020, and it looks like the next checkpoint is the level of 2016. The high here was 31.15. If we are continuing higher, we might go and retest that level. So it looks like cocoa is super high. By the way, I just checked the report. I don't know if it's tradable. I'm sure it's tradable somewhere, but with us, I don't think so. Most of the brokers don't offer it. But olive oil reached all-time historical highs on the high demand, just to show that some commodities are really experiencing shortage. I guess cocoa is one of them as well. So that's as far as commodities. And let's take a look at Forex. Dollar index has been strong, as you could see here. We've been recovering nicely since that. A lot of actions around 101 that we mentioned. We broke 102, and we hit on Thursday 103.47, almost 103.5, and Friday we had a little bit of a correction here. So again, it's sensitive definitely to the Fed's next actions. By the way, it looks like as of now, based on the CME Forex Fed's prediction, it looks like more than 80% probability that the rates will stay the same. So let's see if that works, and next rate is in June, next rate decision. So we had a nice move to the upside. Like I said, we almost hit 105, Friday correction. Let's see how this week shows for dollar index. And with that, we had a nice move breaking through the previous resistance on dollar yen. It looks like we're testing it for probable new support around 137.5. And if that holds, we might continue higher. And dollar Swiss, if you remember, I mentioned to you dollar Swiss. I said that it looks like finally it will start to bounce after this previous week. We did try to move. It was a nice move to the upside, but then Swiss franc regained strength, and dollar got a little bit weaker. So let's see if we are holding this level around here, around 0.9. If that supports hold, we might see continuation to the upside. Now, one pair caught my attention, that's Swiss franc, Japanese yen. As you could see here, we are at the historical high levels here. And on the daily chart, we try to challenge that level. And the high here, you can see it on the monthly chart. This month high so far is 153.95, almost 154. So we are trying. Swiss franc is being strong, and Japanese yen not so much. As you know, that Bank of Japan still hasn't done anything to increase the rates. So the Japanese yen remains weak. So this pair is worth watching. It's either a continuation with the impulse to the upside, or it might get exhausted and have a little bit of a correction. And we might also see some actions from Bank of Japan, maybe. Just my thoughts. Something fundamental might change it. If not, we might see continuation to the upside. And the rest of the currencies are, of course, reacting to the strength of the dollar. Australian dollar, after the try to move to the upside, it's sold a little bit. We are in the tight range here. New Zealand dollar actually showing a little bit of a strength and bouncing from the 50-day moving average here. Euro has been really testing this 108 level for support as we failed 110 to break to the upside. We are sitting on this 108 support here. Pound, as we mentioned this week, the inflation numbers are coming, so pound will be affected. We had a nice try, and that's what I mentioned to you last week, if you remember, that 226.60 area was a nice trade for resistance as we sold exactly from that level, and we came to 124, almost the low here was 124.43, and it looks like that's holding as a support. So we are in around 200 pips channel now between 124.30 and 126.60. We'll be watching what's next. And USD CAD. USD CAD is, as we said, sensitive to the price of oil. It did break below 136.58, and then we tried to break back above it, we couldn't. So we're clearly trading now in about the 300 pips range between 133 and 136 something. And the last one I want to bring up, it's ZAR. USD ZAR is making, or this month we made all-time high. We're challenging that again, and the economic situation in South Africa is not that great, as we know. And as you could see here, the currency is losing its strength significantly, and we are at the all-time highs. So we just broke this high, and that was back in March of 2020, and it looks like we are holding that and maybe preparing for continuation. And here could be the sky's the limit. There's no other reference to the upside, so we might continue higher from this level. And one more thing, just reminded myself, a favorite Euro Aussie back to that technical level. It's worth watching. We came to retest again 162. If you remember, I mentioned to you this few weeks in a row that after holding this level, we might see a nice move to the upside. We did. It was a super strong move, about 500 pips. We came right back. Nice profit taking for buyers here. We came back, and we are playing with that level again. Again, as they say, the past results don't guarantee the future profits. But in this case, it looks like it's playing the same game. It's holding this 162.24 level, and it bounces higher. So if we are holding this and start and continue building support, at some point we might see continuation to the upside. Or this time we might do the opposite. We might actually build the resistance and move lower. So it's also a case. But some traders like to repeat the situation that happened. Okay, and let's wrap it up with Bitcoin. As you know, Bitcoin is kind of usually or normally moving against the dollar. So as the dollar gaining strength, Bitcoin is sitting here after the recent sell-off around 27,000. Actually building kind of a resistance here against this level where we stopped the sell-off. That was 27,139. And it looks like we're building the resistance. Possible move to the downside, but anything is possible. We can start breaking it and building new support and moving higher. We're also between 50 and 100 moving average. So if you take a look at the weekly chart, it's still an uptrend here. As you could see, the higher highs, we still didn't make the lower high here. It's normal correction on the weekly chart. We are sitting on the 200 moving average, so we could easily move higher, retest 30 again, or we can move lower and retest 25. It's also a case. Okay, so that's it pretty much for the analysis. I want to thank you all for attending our webinar. And just to kind of put it all in a short summary, the debt ceiling is still in focus. The Feds are still in focus. The high inflation is still in focus. The Japan market is running strong, leaving behind the classical S&P investment scenario, as a lot of investors are investing in Japanese equity market. We have dollar moving stronger. And That's it pretty much. Again, the whole focus, I think if you just choose number one priority, it's debt ceiling, as Janet Yellen is warning us that June 1st could be that deadline. And if there's no solution, we might see a great issues or negative issues in the financial market. And that's what happened. And they're comparing it to 2011 or 2011, when the similar situation kind of built up and the market sold out and bottomed somewhere in October. So I want to wish everyone a great rest of the weekend, and get some energy, get some rest, and have an amazing and successful upcoming week. All the best. And yes, very important also, next week we will not have the webinar. I will be traveling, so we'll resume it the following week. All the best, guys. Have a wonderful week.